Hey everybody, my name is Joe Pivarunas. I'm the founder and managing editor of Nanalyze. We're a boutique media and research firm that covers disruptive tech investing for a broad audience of retail and institutional investors across the globe. Today we're going to talk about a company called Blade Air Mobility, and the subtitle here says Revenue Growth Takes Off. Now, before we get into that, I wanted to talk about a term that you'll see thrown around called urban air mobility. Now, this refers to, according to Wikipedia, the use of small, highly automated aircraft to carry passengers or cargo at lower altitudes in urban and suburban areas. And here you can see the example of a seaplane. So, urban air mobility, while many investors think about this as something that's arriving with the emergence of all those drone looking aircraft that are being developed, what they call electric vertical takeoff and landing vehicles, what eVTOL. Urban air mobility has actually been around for a while, and the best example of that would probably be the helicopter. Surprisingly, the United States has four times as many helicopters as the closest country, which is Canada. So there's about 9,300 helicopters flying around the United States, which means that urban air mobility is already here. Now, the company we're talking about today, Blade Air Mobility, they're operating in a number of business lines. The first is short distance. So they do, airport service, flying to and from airports. They'll do short distance commutes, short distance charters. And then this second key business line, human organ transplant and jet charters. Now, one problem is that when it comes to how they report revenues for that business line, they don't break them down. And we'll talk about that a little bit later. And then there's the other segment, which is really insignificant when you look at the revenues. And that's one very nice thing about Blade is that they actually have revenues. Now, when looking at their business model, it's quite interesting what they refer to as an asset light business model is really focused on the software stack and not on operating aircraft. So you can see this breakdown here. What Blade does, they'll lease terminal space from heliports and airports, and then they'll hire helicopter operators by the hour who they're responsible for things like insurance, mechanics, storing the aircraft, finding the pilots, etc. And then Blade handles the brand, the software stack, finding people that want to fly, the customer service, and whatnot. So it's what they call an asset light business model. It's very attractive. The software stack they've built is really their core competency. It's the automated communications, the intelligence software to power the whole thing, route optimization. And of course, you can imagine there's a lot of regulatory compliance that goes into this sort of thing. Now, Blade's been around for a while. They were founded in 2014 and they've held number one market share in the buy the seat helicopter market since 2015. And that's a very good place to be in because at any point in time, they can switch out those helicopters with eVTOL aircraft or whatever they choose and ideally, lower the cost. And we'll talk a little bit about that. Of course, that's in their plans. Now, when it comes to looking at the size of the total addressable market, the opportunity at hand, this is somewhat questionable. So in their SPAC deck, they talk about, $1 billion here, $1 billion there, what might be a couple $1 billion. That's not very large, by the way. But when you look at how they came to that number, they hired a big three consultancy firm, and then they hired a third party that would conduct surveys, and they surveyed a whole bunch of people and said they believe there are 3 to 5 million people who have indicated they would use a $195 helicopter service. So asking people what they would do and then what they actually end up doing are two different things. But putting TAM aside for a second, what's impressive about Blade is that they not only met their projections in the SPAC deck, but they actually exceeded them. So here you can see what they were expecting when they had their SPAC. That's how they went public, was using a special purpose acquisition company. And we know how rubbish many of those are. Well, Blade said, we're expecting for 2020, we're expecting $25 million in revenues. They actually brought in 26. Great. 2021, they said, we're expecting 52 million. Well, they came in at 67 million. Now, that may be because of their acquisitions, but The fact that they said they were expecting something and then they beat that is rather remarkable. We don't see that very often. We also don't see SPACs that have historical revenues presented. And on the right hand side here, you can see since the company was started, they've been growing their revenues. And 2021, the spike is there because of some acquisitions we'll talk about. And of course, in 2020, we have the effects of the Rona. On the left-hand side, you can see those two segments we mentioned earlier, short distance travel, right? And then the meta-mobility, organ transport, and jet. Now, we'd really like some color around how much of that segment comes from organ transport and how much comes from jet charters. Now, that spike you see in Q4 2021, we believe is attributed to their acquisition of a company that specializes in organ transplant. So we could probably assume that a majority of that segment is around, a healthy majority is around organ transplant. So here are the two acquisitions they've made recently. The first we were just talking about, that's a company called Trinity Air Medical. They talk about having an asset light organ logistics company in 16 states. According to their website, they did about 4,000 transplant transports in a year. That's about what they do. That brings in revenues of around 16 million a year. And then on the right hand side, you see the acquisition of Helijet, North America's largest scheduled helicopter airline. Now, we're not sure that this is an asset light model. Everything leads us to believe that Blade hasn't changed their desired software only business model by making these acquisitions. And they talk specifically in their deck about making asset light acquisitions. So we're hoping they didn't acquire helicopters here, but Helijet was generating 15 million in revenues prior to the Rona, and after that, that was about halved. So what's nice to see is that Blade is using the $282 million in cash they have in their books. That's after these acquisitions to selectively acquire companies that can help them grow their business. Now, you may be tempted to think that Blade looks like a Uber for helicopters. Well, there actually was a Uber for helicopters. CNN wrote a piece about it. This was several years back, and it was described as an expensive, time-consuming adventure. Well, turns out it was actually cheaper, like a lot cheaper, $145 cheaper and quicker just to use an Uber instead of using a Uber for a helicopter. So the software that Uber had developed was actually acquired by a company called Joby Aviation. And by at least one measure, Joby's probably the furthest ahead when it comes to eVTOL aircraft. We'll talk about that in a second. Now, when we look at the urban air mobility thesis, here's one way to think about it and how Blade seems to be approaching this. So they start with existing fixed routes currently serviced by helicopters. And if they're able to operate those routes profitably, that's a great thing. As they're doing that, they can consolidate additional operators within these routes and start to capture economies of scale. So what they're talking about, asset light acquisitions. Then once eVTOL aircraft are developed, they can replace the helicopters with eVTOL, and ideally, they cost less to fly than helicopters. Now, when you look at Blade's deck, initially they're not going to. As a matter of fact, the range they present shows that the eVTOL could even be more expensive initially than helicopters to operate. That's very important to think about. Now, when I guess one advantage of adopting eVTOL is that they aren't as loud as helicopters. So the one, for example, being developed by Airbus is about 65 decibels. That's the sound of somebody coughing, as opposed to how loud and noisy helicopters are. So even though eVTOLs may cost the same to operate, they'll still allow the expansion into other areas, additional routes that you may not have been able to service with helicopters. And then, of course, when they introduce unmanned eVTOL aircraft, that's where the real opportunity comes. That's where the disruption happens. If you can operate automated eVTOL aircraft much cheaper without pilots, then you can start to fly even more routes and disrupt existing methods of transportation. Now, this is what investors have gotten quite excited about, and this is why we saw 5 companies go public using SPACs. At the top there, you see Joby Aviation, which is the highest valued at the moment, probably because they're the furthest along, even though they don't have revenues. And you have Lilium and Blade Air, of course, with revenues. Archer Aviation, Ehang, that's the Chinese firm. We've researched them before along with Joby, and I'll put in the description of this video some of our past research on these firms, and then another company called Vertical Aerospace. And what we'll do is in a future presentation, we'll try to do some sort of comparative analysis. Now, a firm called SMG Consulting has kind of already done that. They put together this really interesting report. It's called the Advanced Air Mobility Reality Index. That's a great name. And at the top here, they show the company that seems most likely to make this thesis a reality, and that's Joby Aviation right at the top there. Second place is a company called Beta Technologies. That name might sound familiar to regular readers because we came across them when we covered United Therapeutics earlier. I think it was last month. We wrote about how they are looking at using pig organs and transplanting those for humans. They were in the news because they did that successfully with a heart. Well, the founder of that company, she flies helicopters, she's familiar with them, and she had looked at 3 firms that they wanted to partner with for organ transplant. And guess what? Beta Technologies was one of the 3 firms they were looking at. And it also happens to be the company that Blade is looking to work with, well, one of a number. So Airbus at the top here, they were an investor in Blade since 2018. And then, of course, Airbus is developing their own aircraft. And then you have Beta that is expected to start delivering between 5 to 20 aircraft to Blade in 2024. And then at the bottom here, there's a company called Magnix, and they hope to start electrifying one of Blade's largest aircraft operating partners, Lima, with delivery scheduled for 2023. So that's where Blade plans to start electrifying their operations and when they plan to do it. Now, when you look at valuation for this company, you wouldn't consider it overvalued, at least according to our simple valuation ratio. $500 million market cap divided by annualized revenues gives us 5. Well, what does that number mean? Well, we can't really use it to compare to the other eVTOL companies because none have revenues. But we might compare it to a company called Bristow Group, which has the ticker VTOL, and they're currently valued at 1. Now, given all the hype and excitement and asset-light business model that Blade Air operates, Bristow Group actually has declining revenue. So we wouldn't consider Blade Air to be overvalued just based on our use of this ratio on a regular basis. We would say this firm wouldn't be considered overvalued. Now, to conclude, the eVTOL thesis, really the potent part of that is the automation element. That's where cheaper transport could displace other forms of existing transportation, whether that's transporting cargo or humans. Now, if an electric helicopter with multiple blades costs just as much to operate, there's not much value add other than the fact that it will be a lot more quiet. That's where autonomy is an important component, and we want to look at when we're looking at firms that say, all right, we've developed this eVTOL aircraft. Well, is it autonomous, and how far away is that? And is that being portrayed on your milestone map? And then lastly, we'd say that what's impressive about Blade is that they're building a business now. They're not waiting. So we believe companies that start bringing in revenues from operating routes today, building a brand, are at a clear advantage to their competitors who will have to do that later on. So we believe that Blade, for somebody that believes in the urban air mobility thesis, Blade would probably be a pretty compelling company to look at. Now, at their $500 million market cap, they fall below our $1 billion cutoff, but be that as it may, we'll be keeping a close eye on them. So thank you for taking the time to listen to this presentation. We'll be putting out some more presentations around some of the other names that we've talked about today, so stay tuned for those. If you have questions, please put them in the comment section. Make sure to subscribe to our channel. We really appreciate your time. Thank you.